Welcome back to Wednesday, distribution day for Group A, Yield Max ETFs. Overall, I guess I got the chart here. These are the single stock Yield Max ETFs that pay based distributions based on selling calls on the underlying stock in choice. As far as return, if we filter based on percent return, we got TSLY. Pay a nice 80-cent dividend on a $9.45 price, gives about almost 8.5%. TSMY was also pretty good, 5.8%. Roble is a pretty good investment thus far. Almost a 20% return, but 5.5% on the distribution. GOOY was actually pretty good again, almost 5% for Google, which we'll take a look at their distributions versus time, but the last two have been pretty good for Google or GOOY. OARK, 34 cents, 3.76%, YBIT, 3%. Snowy, a bit lower, 2.8%. Then XOMO and Berkshire's Yield Max equivalents, 1.8 and 1.11% respectively. Yeah, and then the other thing I want to know is, I guess I don't have it yet, but it looks like they also announced Y's first dividend. I'll get that added to my chart. That was $1.05. So pretty good there. And then the weeklies. I'm going to have a chart for the weeklies here pretty soon, but to just list those off. Salty was 63 cents. LFGY, pretty standard, that 43-cent range. Chippy, 40 cents. GPTY, 31 cents. YBIT, 31 cents. RDTY, almost 31 cents. QDTY, 22 cents. SDTY 18, almost 19 cents, and YMAX back to about 14 cents, higher than it was last week. YMAG 9 cents again, almost 10 cents, and OLT at your 9 cents as standard for that fund. But for Group A here, if we jump into that, just to take a look at it quick on the trading day, looks like most stuff's up except for Exxon. Really, except for Exxon, got most stuff trading a little higher, and the Yield Max funds are also trading higher, although they look to be lagging the underlying equities a little bit. So looks like we're hitting those call options. Most of these funds limiting the upside somewhat. But yeah, I guess jumping into the distributions. The first one, GOOY. I just wanted to show the distributions per share on that one. You can see his last two have been pretty good. I guess if you're a GOOY shareholder, you're used to 41-cent kind of dividend. The last two have been almost 50% higher than what you're expecting, or even more than that, almost 70 cents a piece. So pretty good there for the GOOY shareholders. GOOY, of course, has really had from a total return perspective, was a pretty poor performer there for a while. Total return going up and above and below 20, so back where you started. But really, since the downturn in April, GOOY's been pretty nice, jumping from almost 20, almost up to the 26th level. Cumulative dividends hit $11.20 since the inception date. But the last two distributions, of course, really pumping this up. Congrats there for the GOOY shareholders. Snowy, let's take a look at their distributions per share. Yeah, like I thought the last one was pretty light, although it's 3 of the last 4 have been pretty light, with that good one, $1.12, almost $1.13 last month. So yeah, Snowy, a little light. Total return hanging around that 30, a little below that $30 range. Good investment from the start, but the last couple of distributions haven't been the best. And then finally, XOMO, of course, this is based on Exxon, a pretty low volatility stock. Therefore, your distributions are all pretty low from a percentage basis. I think it was just over 1% for the month. But yeah, this dividend a little light, but pretty much in line with kind of where you would expect it to be. As far as how those funds performed, not the best. You've had a cumulative dividend of $7.83, but your ETF price went from 20 down to 12, basically. So you're basically losing money on this investment thus far, mainly because your cumulative dividend increases, but with the increase, your ETF has decreased. So yeah, XOMO definitely not, for as long as it's been around, definitely not probably one of the worst performing YieldMax funds. I'm jumping into YBIT. Bitcoin's looking a little better today, so hopefully that's good for YBIT. We'll see. But YBIT's one of the lower distributions. And then price plus the cumulative distribution. I guess if you've owned this stock, really since the inception date, it initially shot up. But since then, you're about sitting even. Overall, you're up maybe about 10%. Cumulative dividend's been $12.32, but the ETF price is all the way down to 10. So that's how you're looking for YBIT. OARK got a distribution that's basically right in the average, at least for the last year and a half or so. So around at the 34-cent range. Every distribution has been between like 30 and 40 cents, so pretty standard there. And then from a overall, it looks like OARK since kind of like Google or GOOY since April, really with that big downturn with the Liberation Day tariffs. It's been a pretty good investment from a total return perspective. The ETF price has gone up slightly, and the cumulative dividend, of course, has added to itself every month since then. So that one might be an interesting one to track going forward. But jumping into TSMY here quick. Distribution was actually, I think it was just, yeah, it was $1. It was just over $1, or basically $1. first time TSMY has actually been at $1. So first time, highest dividend since inception. I know TSM stocks, I think, been doing pretty good lately. And then from a total return perspective, yeah, a little boost since the last checkpoint last month. Almost, what is that? Maybe almost going on almost a 10% return in total return in the month, roughly. That's just a spot guess. But TSMY has been a very good performer. Just looking at the TSMY details here quick. TSM up again today, 3.1%. TSMY lagging slightly, of course, because positionally with TSM almost 288. So we're getting just below 290. All these calls here, we've blown by on the 277.50, so we're gapped on the upside. That said, we did buy calls at 282 or 285 and 287.50. So we're actually gaining some there. And then from a synthetic usage perspective, we did have credit spreads on 100% or everything we bought. So I guess for the end of the week, if TSM keeps going higher, I would expect TSMY to basically perform similar percent for percent as TSM. So if you really get some upside on TSM, the underlying equity, TSMY, the YieldMax fund, should follow almost 1-to-1 from a percentage basis because of these call spreads. But yeah, like these funds in general, I'm always of the opinion, I love the call spreads. When I look at the synthetic makeup, I like to see 100% call spreads. You do get a little less premium for the week, but I'd hate to miss out on the big weeks that are going higher. I don't want to be 100% capped on the upside. So credit spreads all the way for me, just from an opinion perspective and watching these funds for some time. But that's the way TSM is structured. It's been a good investment thus far. Yeah, and if you go back to here, I do track the underlying equity price. Yeah, you can see recently it went from the 230s, and then what was that? Almost 288, I believe. Yeah, 288 almost. Good move, I guess, for TSM shareholders as well as YieldMax fund holders as of late. But then TSLY, I think, what did I say the other day? It was the third biggest fund for the single stock YieldMax funds now. It took over Coinbase due to the strong performance in TSLY lately. But I did say the 80-cent distribution, that's a high for the last 3, 6, 9, 10, almost 10 months. The highest it's paid in 10 months. It's good to see TSLY start paying a pretty good distribution again. I know that's always been a widely held fund. It's good to see the Tesla underlying equity kind of get a boost, therefore driving the YieldMax fund higher and also adding some volatility to the stock to get some more equity premium. And then you can see from the total return perspective, basically add the green line to the blue line. A little bit of boost, been straight up since once again the March-April timeframe. So that one will be a good one to watch. Hopefully that one gets going. If you take a look at just how it's structured right now, mainly covering this because TSLY, I think, is the most widely held ETF in Group A. So probably good to just touch base on its positioning quick. You can see Tesla, the stock's 3.46%. TSLY is up 2.4%, so good, but trailing Tesla by about a full percentage point. As far as why, so TSLY's at 460 now, so about right here. Here's where it was. The black line is basically where it was this morning. So we've gone by all the calls that we've sold, so we're getting capped on upside pretty significantly right now. That said, we are getting close to where we've started buying calls at 462.50 strike. So if Tesla keeps going higher, we're going to start capturing a percentage of the upside, going all the way up to 477.5. And then I believe if they got full credit, they got 100% credit spreads. So anything past 477.50 from a percentage basis, TSLY and Tesla should perform exactly the same to the upside. But yeah, the synthetics on Tesla are 415 and 420. So from a fund makeup perspective, the synthetics got a pretty good value, 65 cents, probably even a little bit higher now. Pretty good percentage wise for a ETF that's only in the under $10 basically. And then the other contracts, at least when I ran this, we were negative 17 cents at the moment. So that's some positioning for TSLY. Just taking a look at its components here on a time series basis quick. TSLY, so since they paid out their last distribution, which was probably about a month ago, but you can see their cash position the cash position, which is in blue here, has been going up. A lot of that's driven by when their synthetic gets close to about $2 a share, it looks like. The YieldMax team cashes it out or basically moves their strike price higher and takes in cash. And you can see you get the boost to the cash whenever they do that. And keeps going up, and it looks like the synthetic keeps going higher, so that's always nice to see. But yeah, I think the last time they paid a distribution was probably right around here sometimes, so you don't really see a big dip. But that's always good, which means a lot of times with that 80-cent distribution, you should see a pretty good, or once ex-dividend date approaches, you should see a pretty good decline of about 80 cents in their cash positioning to account for that somewhat larger distribution than recent being paid out. But that's look at TSLY. Berkshire, pretty low distribution from a percentage basis, but Berkshire, the equity is not very volatile, so I suppose that would be expected. 53 cents, higher than their first one. Their second one was almost $1, so on average, they're paying about a 68 cent distribution. Since distribution date, I think total return, shareholders are up slightly, not much. The actual ETF's down $1.89, but you've gotten $2 in dividends, or $2.04 in distributions thus far. So a pretty flat investment thus far from a distribution perspective on the Berkshire option. I did just add the in-depth for Berkshire today. So if anybody, of course, I don't think that's a big fund at all, but for anybody that owns it, Berkshire is at $4.98, roughly where this black line is. They got calls sold at $502.50 and $505, and then calls bought at $512.50 and $515. Or synthetics at $4.90. So from a fund makeup perspective, they got a little bit of value in the synthetic. The contracts they sold are like at a negative 18-cent drag on the fund currently. If they expire worthless, of course, at negative 18 cents will go to zero, thereby increasing the ETF price accordingly. But yeah, Berkshire, not enough data yet. It hasn't really moved a whole lot, so will be interesting to track going forward. But jumping on to another somewhat newer fund, one that's been performing pretty well would be Roble, based on Roblox. You see the distribution here. It came in as the one they actually, on their X.com account, it's the one they led with because it was over $3, which is very good. But Roble did start at 50, whereas most of the older YieldMax funds started at $20 initial investment. So keep that in mind. But $3.50 initial investment is pretty good. And then from a total return perspective, the ETF price is actually up almost 10%. On top of the distribution that you've received, the cumulative distribution thus far is $5. So another 10%. So you're looking at almost like a total percent or 20% total return in the short time that's been available. A lot of that, of course, driven by the Roblox equity that's been on a roll lately, going up quite a bit. And then just to look at Roble, it's been a pretty good investment. So let's just see how they're structured for the week. The Roblox stock down a little bit. YieldMax fund slightly outperforming, 136.50. So about exactly where the black line is. They got calls sold at 136, 138, and most of them at 142. So where it's at right now, it's a pretty optimal setup if it were to stay there. Given most of their calls look like they're close to expiring worthless, but they do got the spreads bought, from 143 up to 146. So let's just look at Roble. Yeah, overall, that's Group A. Like I said, I'm going to add the weeklies here, and then I'll add, the RDYY. I believe that's based on Reddit, which I believe Reddit's not doing very good today. If I remember the headlines that I saw, RDDY, I would imagine, or RDYY, it is also not the best ticker today for those who own it. Just making sure, confirming that opinion before I end. So yeah, it looks like Reddit's down about 10% today. So yeah, RDYY is also down about 10%. But yeah, that's Group A. Thanks for tuning in.